Hello and welcome to another video on my YouTube channel. My name is Joris and today I am here with the update for October of 2025. So I'm 1 year and 2 months in investing into my Yuh-portfolio, and I bought Shell and AXA. And you can also see that I'm going to discuss Q3 and Q2 results of Accor, AXA, Holcim, Logitech and Nestlé. There are timestamps in the description down below, so you can go ahead and skip to that section if you want to. Even in the line here below, you will be able to see which company I discuss where, so you can go ahead and skip the sections that you don't like. I don't mind that. I'm just making the videos as attractive as I think they can be. Now I even added here a little, yeah, image generated by YUH. So YUH is the European AI. I like YUH a lot. I think it's better than Copilot and better than OpenAI. So YUH, if you haven't tried it out, YUH from Mistral, it's definitely worth it. And you can ask a lot of questions for free every day, so try them out. And you can see my total on my Yuh-portfolio right now is 3,614.69 Swiss francs. I shouldn't say right now. It's from the 24th of October, that number. Today we are the 27th. So later when I get to the Getquin section, you will see what the stock market did today. And as always, on the 24th, my wage got paid, so I transferred 200 Swiss francs to my Yuh account, and that's what I can control myself. What the stock market does, yeah, it goes up and down as it pleases. So timing the market beats timing the market, and that's how I had 242.93 Swiss francs to my disposal. No dividends were added to my account in the past days because my previous update was from the 3rd of October. So now it's from the 24th of October. So no added dividends. So just 200 plus 42.93 Swiss francs that were already in my account. So as said, it's all the results of the 24th of October, the end of Friday evening. And the quadrant overview that I'm going to give next is from Thursday evening on the 23rd of October. And there you can see that we had actually the same 5 buyable stocks in this quadrant. So Volkswagen, AB InBev, AXA, PKW and Shell. And you can immediately see that AXA and Shell are in the green. I also gave it away on the first slide already. So I bought those because they are below my PE value, below which I want to invest into the stocks. And I know that yeah, I need to go here. Swiss Re, I know it was DHL. DHL was also below my PE value, but there is still uncertainty about the falling free cash flow that was happening with DHL in the past few quarters, and also the fact that they had to deal with the tariffs in the USA. Now they are up and running almost completely again with their packages to the USA. But yeah, still it's going to have an effect, and I want to see what effect that had on the numbers. Probably the free cash flow is going to go down once again, and I don't like it when the free cash flow is going down of a stock or a share. So that's why I'm not putting that one up here and still putting Volkswagen here, although they have problems with Nexperia. So they are a ship producer, and because of the ban on or how do you say it, the lock of the Dutch government on Nexperia, There are less chips being produced by Nexperia because China is of course not that happy with the block of Nexperia by the Dutch government, and they get less deliveries, so they can produce less chips. And Volkswagen depends heavily on the chips from Nexperia, so they said they were going to turn down the production of the cheaper cars, and yeah, they also started searching for solutions, of course. And I heard rumors that actually this week they are again increasing the production of those cheaper cars because they found replacement chips for in those cars. I don't know whether or not it's true. It's rumors, so not financial advice. From the moment that I heard the rumors, Volkswagen shot up once again. So it was down to 90, 90 and a half, and now it's again 92 and a half. So they moved up €2 once again. But for me, I didn't buy extra. Maybe next month I will do it, but it's always a guess. I was always hoping for Accor, but later in this video you will see why it rose again in the past 5 days, which was really annoying because it was down to 17.98. So I thought, okay, it's finally going in the direction of the 17 that I need. But yeah, it's always when it comes near to the 18, it bounces up. So a lot of people know that Accor is a good stock, and they start picking it up at a PE of 18. So I don't have a chance. And yeah, they came with good news as well, but more on that later. So in fact, you see that nothing has really changed. Okay, I moved DHL from this side to this side, and I didn't turn it into blue because actually in my overview for September of 2025, I changed it there already. So yeah, when I made this slide, I didn't remember to also put ENG and DHL here in the blue because they switched places. But for the rest, everything stayed the same. So Swatch did actually quite well in the past 2-3 weeks, and they moved up highly in PE value. They also only report half-yearly results, so you can't expect a quarter 3 result of Swatch. And for the rest, yeah, nothing really changed. So I can continue with my video, and I bought Shell, so 3 pieces of Shell I bought for a price of 32.62 euros a piece, and with the cost of €1 commission and 0.15 in tax, the total cost was 99.01 euros, so a little bit over 1.16% in cost there. And I increased it so much that Shell is actually now my largest position in my portfolio, and I still believe in this company. Sadly enough, in 2020 they lowered their dividend. Probably they could have kept paying the dividend, but in my opinion they did the right thing and lowered it, because sometimes it's better to lose your streak than maintain it and then lose your company. So they did the right thing. In America, they will maybe make another decision when they were in the place of Shell. So, but in my opinion, they did the right thing. So they lost their aristocrat mark, but in fact, for me, they still are a really good dividend stock, and I like them for making the hard decision to cut the dividend in 2020. They are presenting their results at the end of this week, so on the 30th, and the predictions for the earnings per share of the third quarter are actually quite good. So on average, the analysts expect a return of an earnings per share of 1.40 euros. So that's a huge increase. Up till now, it was 1.93 euros for a whole year. So in the coming quarter they are going to add. In the quarter that passed, they added a lot to their earnings per share. You see in the previous slide as well, so when you go back in the video, you will see that I use an earnings per share of 2.93. So I added quite a lot to the earnings per share. So you see that sometimes I always also work with a forward PE when I know for sure that the stock is going to perform well. I can be wrong about it. So although I believe the analyst and I even overestimate over the analyst what the earnings per share is going to be, it's not financial advice, it's just my own opinion. That's why I changed the earnings per share myself for my analysis. I also do the same for PSP. There I lowered the earnings per share because I don't think when a building is worth more that the earnings per share should be more as well, because you don't really earn it when you don't sell the property. So it's only paper gains, and paper gains for me they don't mean a thing until you realize them. And that's why I dare work with other values as well. So for me, Shell remains a global energy giant with a well-diversified portfolio spanning oil, gas, and renewable energy. They also produce chemicals that are renewable, but volatile oil prices and regulatory pressure to reduce carbon emissions could impact the profitability. They do huge investments into lowering their carbon imprint, so in that regard, it's really good, but most of the time, those investments don't pay off for the company itself. It's good for the environment, and in that regard, it's good for people. And in that regard, I don't mind that Shell loses a bit of profitability to improve the environment. So sometimes you also have to look it that way. It's like Swatch. I like Swatch because they maintain the jobs and they don't want to risk the fact that people lose their job, that they move to other companies, and then when the economy picks up again and you need the people with the expertise, that they are already working somewhere else, and then you have to train new people, put in a lot of money again, and when they are then again trained to a certain standard, then the economy is in downtrend again, and then you have to lay them off once again. So I think Swatch is making the right decision, Shell is making the right decision, and that's why they are in my portfolio. And then just like last month, I also bought AXA this month, once again. So 8 months ago, I bought it at 37.22 euros. Last month, I bought it at 39.69 euros, and now I bought it 50 cents cheaper at 39.19 for a total of 119.22 euros. You know of the extra financial transaction tax in France, 0.47 cent extra there. That's a bit unfortunate, but at least when I sell the stock, it's not going to be there. So it's no investment advice that I'm giving here. So for me, it's one of the lowest risk stocks that I have together with Nestlé. And my wife and I, we like AXA. We are insured there. We like their products. We like their service. And what you know, what you like, if you are able to invest in it cheaply, in your opinion, then you should invest in it if you have the money available, if you can spare the money. So always be careful with that. So once again, not financial advice. And AXA is well diversified across life, health, and property segments, which offers resilience through economic cycles. So that's really nice for my investment portfolio as well. They have a strong solvency ratio of 220%, but they also have a hard time growing fast in Europe. But reasonable growth is sometimes better for insurance companies. But more on that later also in the discussion of the quarterly figures of AXA. It's going to be the second firm that I talk about. So on the 24th of October, I deposited 200 Swiss francs. So in total now I have deposited 3,300 Swiss francs. And the total on my Yuh was on the 24th in the evening, 3,614.69 Swiss francs. Okay, I took screenshots on Saturday morning at 10:25. So it's not completely Friday evening, it's Saturday morning, but the numbers didn't change much since Friday evening, not like on Getquin. So 3,614.69 Swiss francs, and my cash balance on my pay account from Yuh was 39.37 Swiss francs. Here you can see the overview of my investment portfolio. So now Shell is spanning the crown with 555.56 euro. It was almost all fives for the number, but the six was there to ruin the party. And then we have Nestlé, BKW, AXA, and Logitech. So my 5 biggest positions are all in the green, which is really nice. Volkswagen is still in the red, and I think I will buy more at the end of November, but still I have to wait and see. And here you can see that Swatch Group went from red, well in the red, into the green now. So they performed really well in the past month. So really happy about that they turned from red into green. And then of course we are still in the red with BASF. So only 2 losing positions right now, Volkswagen and BASF. But I don't think I need to sell one of those 2 stocks. I think BASF is well on the way to turn things around. And Volkswagen, okay, they had problems, but they are still one of the best companies producing cars in the world. So a lot of people, they are crazy about BIT and crazy about Tesla, but yeah, Volkswagen, if you look at the numbers, actually they are good. They aren't amazing, but they are good. And then of course we have a little bit of crypto, the Swiss coins that we receive every time when we do a trade. I did 2 trades again, so I added 10 Swiss coins to my Swiss coin account, my YUH-account. So now from 355 I went to 365 Swiss coins. The Swiss coin went up also from 19,71614 Swiss francs to 0.0199578 Swiss francs. So actually a quite significant jump there. I love to see it. And now I have 7.28 Swiss francs in Swiss coin. So a rise of 0.28 compared to last month. And it is up 13.94%. So a plus of 0.89 Swiss francs. So it's slowly growing, and I'm not selling it, of course. I'm just keeping it. It's a nice thing to do here in this video to see what it's earning me to keep those Swiss coins. A lot of people, they sell them, of course, because it's a little bit of money, but I want to wait and see how it goes. And here is the overview of my Swiss coin account, my Yuh account. So I deposited 200 Swiss francs, 3,300 deposited so far. The total you already know as well, and the cash balance is 39.37 Swiss francs. In total now I invested 3,319.15 Swiss francs. So that's with everything, with costs, exchange costs, and reinvested dividends, all in that number. The investments were worth 3,575.32. So there is always a small difference. I don't know how it comes, but it was all screenshotted in a time span of 2 minutes, and still it managed to change the number here compared to this one, and it was on a Saturday. So Sometimes it's really crazy, but at least it's not the value of the day before, it's already the value that's more or less the same as my investments were worth on the 24th. So my stocks were then worth 3,568.04 and the crypto is worth 7.28. So my current profit loss on the stocks is 3,568.04 minus 3,319.15. So a plus of 248.89 Swiss francs. That's up 7.50%. And it's an increase of 95.34 Swiss francs compared to last month. Last month I was down 62 and a bit Swiss francs, so that was a red month. Now I'm well in the green and I made up for the loss of last month as well. So really happy to see that. And on the deposit amount, I'm up 314.69 Swiss francs. So well on the way to reach there a value of 400. And that means that I already have 2 extra months then in my YUH-account as added value that I didn't have to contribute a thing for. I didn't have to contribute it myself. I contributed 3,300 Swiss francs, of course, and invested that in order to attain the 314 Swiss francs already. And then when I reach 400 Swiss francs return, then hopefully, yeah, it comes fast, but it can when there is a crash, it can last. It can go for a while, even 1 year or 2 years before I then reach a profit of 400 Swiss francs. So I'm not going to look forward to it too much, but it's nice to see everything in the green this month. And my dividends, they make up 18.06% so far of the profit that I have so far on my YUH-account. And the appreciation is 71.94% of the profit that I have right now. Paper profit, of course, I know that. So then the brutto dividend in total, I will be able to earn next year 132.48 Swiss francs. So with a current yield of 3.71%, I'm a bit below the 4% that I'm aiming for, but in the long run, I'm well on my way because my yield on cost is 3.99%. Last month it was 3.99% as well, so nothing else changed, and I'm really happy about that. And yeah, the euro became much weaker there. I lost 1 cent on the dot, so that changed my total earnings also a bit. It was 134.48 before I changed the 3 into a 2. But I hope that the euro becomes stronger again. But I fear that it's going to go down to 0.906 in about 3-4 months, or maybe over 1 year. But it's going to move further and further down because the Swiss economy is just strong. So we can go and watch to Getquin right now and see how it is going now, because yeah, today the stock market was open, so I was the whole day I was above what it was standing on Friday evening. So I was always in the plus. Sometimes it was not by that much, so about 5-6 Swiss francs I was up, but now I'm up 10.61%. So actually, that's about what my Swiss coins are worth. So you see that my worth here is plus minus the worth that my total portfolio was worth on Friday evening together with the Swiss coins. Shell moved down today a little bit, 0.40%. Nestlé moved down 0.67%. The market is saying it's because of the profit taking, so it was standing about 74, 75. Then it moved up to 84 Swiss francs, and since it reached that value, they came down once again. And the market is saying it's profit taking, but There is also still negativity around Nestlé, although the results were okay and the new CEO is saying the right things and saying that he will do the right things. Yeah, there is still uncertainty, and the next results will be crucial. When the next results are good, you will see Nestlé shoot up like crazy. But not investment advice. It's just my own opinion. I already put a lot of my investment amounts into Nestlé, so when you see it, it's more than 2 months that I already invested towards Nestlé. So it's 2 months and a half that I put towards Shell. So I'm putting my money where my mouth is, and I'm then hoping for the best, just like the rest of you. Then we have AXA, BKW, Logitech is the next one in the line, Volkswagen today up 0.60%, Logitech once again up 2%, DHL up 1.55%, AB InBev still struggling actually, they are really standing still. I was doubting whether or not to buy again AB InBev, but I didn't pull the trigger on that one. I saw that Shell was really interesting, certainly viewing the results that they are going to present on Friday. So hopefully I'm right on that. When I'm not, you can come and laugh with me in the comment section down below. I will give you a heart for it for sure. I don't mind when I'm wrong, I'm wrong. When I'm right, I'm right. Swatch dropped a little bit. Then you also have Holcim, ENG, and MRISE moving up. Those are really small positions. BASF as well. So I should start thinking about expanding those positions as well, but it's quite hard. They are a bit too expensive. ENG is moving down. Now, of course, they went up a bit, but they were close to 10.30 and my PE value is 10. So below 10, I'm going to buy it. But it was 10.30 and now they move up again. That's just the way it goes. And here you can see the predictions of 2026 and 2025. So I still need to receive a dividend from Shell, and then in 2026 you can see the totals there, and the prediction here is not that far off from my value. So for me it was 132 and a bit, and here it's 137.59. But of course Getquin also calculates a bit. They make also predictions about what the shares are going to distribute, what the companies are going to distribute. And yeah, you can see that in May I'm going to receive 90 Swiss francs. So that's almost one half of my monthly contributions that I'm going to receive extra in that month. So that will be an interesting month next year for sure. And momentarily I'm up. My total return is 346.74 Swiss francs. So also there, not that big of a difference with the values that I have on my Excel sheet and that I present on my videos. And then we can go to the quarterly results. So Accor, they published their results of the third quarter. They upgraded the guidance and an additional share buyback program. So they announced that, and despite the mixed Q3 performance, they moved up. So you have luxury and lifestyle segment that saw a 5% increase in RevPAR, and RevPAR stands for revenue per available room. So if you are wondering what it stands for, RevPAR stands for revenue per available room. And sadly enough, there was a decline of 1.1% of the RevPAR for the premium, mid-scale and economy division. So in that regard, okay, the luxury and lifestyle segment, that's already performing good for a few quarters right now. And the premium, mid-scale and economy division is suffering for a few quarters now already as well. So I want to see a swing in the results for these segments. The luxury and lifestyle segment, I'm not that worried about that. They have really nice hotels for people with a lot of money. They will come, they will spend their money. So there, a good return is almost always guaranteed. But it's in this segment where they make the difference. So a decline by 1.1%, that's not that great. And I thought, okay, Accor is going to go down and I'm going to be able to buy it at a PE below 17 or at 17. But they confirmed also the full year results. So that was already a positive signal. And then they came with this announcement. They plan a first public offering for Ennismore. And that's the lifestyle and entertainment hospitality platform of Accor. And especially this announcement made that Accor shot up Friday and also today. So yeah, there goes my plan of picking up Accor below 17 or at 17. And yeah, I need to hope that the hype goes over a bit and that then they start focusing on the decline from 1.1% for these segments. But I think that I missed the boat on Accor. I hope I'm wrong, but I think I will have to wait for another few years before I can pick up some shares of this great firm. Then we have AXA. They also published their results of the third quarter. They have strong capital generation, so AXA is on track for capital generation in the upper range of its guidance and reflecting robust financial health and disciplined capital management. So that's always nice to read, of course. Their underlying EPS growth, they anticipate 6.8 to 8% growth in underlying earnings per share, and that's signaling confidence in its profitability and operational efficiency. And their shareholder returns, well, AXA executed a share buyback in the third quarter, and this demonstrates that they are committed to return value to the shareholders. Also, the dividend, they are going to at least maintain it, so that's also a good signal for investors into AXA. The negative point is that there are challenges in specific markets. So in Europe, they have difficulties of growing and they face softening personal line pricing in the UK, and they also have net outflows in Italy. So that's not nice to read that they have net outflows in Italy. They are making up for it in other countries in Europe, but yeah, it's not a good sign when that starts to happen. So they need to do something in Italy, probably losing a bit of their profitability than in Italy to regain customers. And yeah, when you see pressure on profitability, then the hairs on your arms come up, and you need to pay attention to those kind of things. So never neglect the red signs as well. But still, I think overall AXA is a really good company. I said it in the part where I bought the AXA shares that I still believe that AXA is really well diversified and a good play to as an insurer and bank. Then we can go to Holcim. They published their Q3 result as well. They had strong sales and EBIT growth. So Holcim reported a 4.9% increase in net sales in local currency. That's really important because in the Swiss franc currency, they of course suffered a bit because of the strong Swiss francs, and a 9.8% rise in recurring EBIT, so reaching an industry leading margin of over 19%. So that's magnificent. A margin above 15% is always great, and Holcim reaches one of 19%. Sustainable products drive demand, so sales of low carbon eco-packed concrete and eco-plant cement continue to grow, now representing 31 and 35% of their respective segments, up to 26% and 32% from last year. So their eco-packed and eco-plant are performing how they should, so they're nothing to complain about. And then they also did a strategic acquisition of Xella in Germany. So there they acquired the sustainable walling systems Xella, and they are the European leader. They have net sales of about 1 billion, and they are only paying 1.4 billion for Xella. So that's a bit surprising for me. I think it's really cheap, and I think Holcim did a really good deal there. And Xella even has a higher profit margin than Holcim right now. And Holcim already has a margin of 19%, so it's going to increase further because of the acquisition of Xella. And they already said that Xella is going to contribute in the first 6 months of the acquisition already to the results of Holcim positively. So that's really great that they were able to buy Xella at that price, and that they are going to gain a lot from it, in fact. So they say that they have synergies with their own distribution network, so really great acquisition. But you never know until you see the actual results. So that's just what they depict and what they predict, but whether or not it's correct, you always need to see it later down the line in the results. But at least it looks promising. Foreign exchange headwinds, of course, the Swiss francs is too strong, and they faced a significant negative impact from the foreign exchange. So that was 600 million negative impact, which weighed on the reported results. So also on the 4.9% increase in net sales, that was because of the 600 million that the performance in Swiss francs lowered. There the increase wasn't that big. I think it was 3.9% in Swiss francs. So that's quite significant, that difference. And then we can go to the second quarter results of Logitech. Logitech has a bit of other annual year than the other companies. So there it was only the second quarter that could be reported now. And they reported a 6% year-over-year increase in net sales, reaching $1.12 billion. So driven by strong demand across its product lines. So always nice to read that. The GAAP operating income rose by 3%, and the non-GAAP operating income increased by 5%, with GAAP EPS up 10% compared to the same quarter last year. So great profitability there. And they launched 18 new gaming products and advanced its video conference technology. They were named one of the world's best brands by Time magazine and one of the best employers by Forbes. So in Belgium, that's a bad thing when you are being called one of the best managers in Belgium, because then the year after your firm goes down. But that's not the case when you are named in Time magazine or in Forbes. So in that regard, I'm not that worried like I am when the manager of a firm that I own is named manager of the year in Belgium. But always nice to read that your firm is doing great for their employers and also for its brand visibility. They face, of course, market challenges in China, which has repercussions on their R&D amount that they need to spend in order to maintain on their position in the market. And actually, the first results of their R&D research that they increased is showing only modest progress. So that's a bit of a negative point. But on the other hand, when you are onto something and you want to come with great products, you don't need to show them all the time when you're on an exposition. So sometimes it's better to work in silence on great products than always telling things about products that don't even exist yet and that raise the expectations of the investors enormously, like Tesla. So I'm not a fan of that. I like Logitech being down to earth in that regard. And in that regard, I'm not worried at all that they increase their R&D expenses and that we don't see a return just yet. It's going to come. They have great engineers, and I think they are going to come out with great gaming products, great products for normal people as well. It seems now that I'm calling gamers not normal people, but I'm not trying to offend gamers, of course. I'm a gamer myself as well. But yeah, you know what I mean. I don't want to be offensive at all. And then the final slide of this video. There is still the final slide, of course, but this is the final slide that I'm going to discuss. So Nestlé, with the Q3 results, they are accelerating organic growth. So they had 4.3% organic sales growth in the third quarter, up from 3.3% for the first 9 months, indicating a positive trend and the effectiveness of recent strategic initiatives. So, okay, it's not due to the new CEO because he was only present for 2 weeks before they announced these results. So the Q3 was already finished, but his department of Nescafe contributed, or Nespresso contributed a lot to these good results. So in that regard, he contributed a lot to these results as well. And there is a strong real internal growth. So the real internal growth reached 1.5% in the third quarter. That's significantly beating the expectations of the analysts, where they were only thinking about 0.3%. So that's a difference of 1.2%, which is enormous. And it was driven by innovation and increased investment in high growth categories, like Nespresso, of course. Cost saving measures. The company increased its cost saving targets and it's on track to deliver the 0.7 billion Swiss francs in savings for 2025, which is a big number. And they want to go on with their Fuel for Growth program. And then they, of course, announced 16,000 job cuts globally. And it's only going to be only. That's a difficult word to pronounce actually, but it's going to be 4,000 jobs in the production, and it's going to be 12,000 jobs in the administrative roles. So also selling agents and stuff. So in that regard, they are going to cut mainly the higher paying jobs to save even more money. A lot of people are really happy about that, and that's why in the beginning the stock went up. Also with the fact that their organic growth was 4.3%, because they want to have around 4% every year, and with 4.3% they are really hitting that mark. So people are really happy. But then yeah, the past week they traded slowly down, and today it's still maintaining that trend. So whether or not they are going to go down all the way back to the numbers before the announcement of the third quarter results, I don't know. But if they do, you may be sure that I will be waiting to put another 200 Swiss francs toward Nestlé. And with that being said, thank you for watching to this one. Please hit that subscribe button, hit that like button as well. That helps out my channel enormously and lets me know that you like this kind of content. And thank you for watching to this one, and see you on the next one on my YouTube channel. Bye.